Financial markets, more specifically technical price charts, are fractal. Let me explain what that means and why it matters to you. A fractal is a complex geometric shape that can be split into parts, each of which is a smaller self-similar copy of the whole. Now that's pretty confusing, but in simple terms, it means that fractals are patterns that repeat themselves at different scales. In the context of financial markets, this simply means whether we look at the 1 month, 1 week, 1 day, or 1 minute chart, the price action we see is going to be the same. We will see the same concepts working, we will see the same confluences forming, and we will see the same exact trading opportunities arising inside of any time frame. So why does this matter to you? Well, first of all, I get asked a lot on this channel, on my videos, what is the best time frame to apply this specific strategy? So for supply and demand, what's the best time frame to apply supply and demand zones? What's the best time frame for structure? And so on and so on. And the simple answer is, because the markets run in a fractal nature, and because of all of the ways that I teach you to trade being price action focused, you can use any of the concepts on any of the timeframes. You can scalp, you can day trade, you can swing trade, you can position trade. When you understand that markets are fractal, you understand that opportunities arise in a similar manner across pretty much every time frame. And that leads me on to a more interesting point. And that is about becoming a dynamic trader by understanding the fractal nature of the market. So I sometimes get asked, am I a swing trader? Am I a day trader? The simple answer is no, I am just a trader. And the reason for that is some of my trades are going to be swing trades that are taken over the course of a few days or a few weeks, and others I'll get in and out in 1 or 2 hours. I am very dynamic with my trading, and it's this fractal theory that allows me to do that. Because I know if my system works on one time frame, it's going to work on another. So now let's go over to the charts, and I want to break down an example for you so that you can see how this fractal theory allows me to be a dynamic trader and how you can follow these steps to become a dynamic trader yourself. So here we have the 4-hour time frame on Euro USD. Now, I'm not going to go into massive context on the higher time frames because I want to lock in on these two fractal trades, okay? But what we had seen here on the 4-hour had been a lower low, lower high formation, downtrend, shifting into higher highs. So we can see the very low of the trend is just here. This is our low. And our previous lower high was this area just here. We can see that after forming this lower high, we came down, we formed this low, and then the market has pushed up and broken structure. So what we're actually seeing now with the formation of this new high is a change in the trend direction. We're seeing a market here that is shifting from lower lows and lower highs into a higher high, which is then generally going to be followed with a pullback and a continuation higher, the formation of a higher low into a new upward trend. Now, with this in mind, using the other concepts I trade with, such as supply and demand, I can see there's a very clear imbalanced demand zone just beneath this market gap. So what we've seen this week is a big drive in momentum, pushing the market higher. We had a break in the structure, now we're starting to pull back. So it's a pretty clear opportunity for me to start buying towards some of these swing highs. Once the market is able to pull back to this level, I'll be looking for direct buys all the way up to take us towards, first of all, this swing high liquidity, and second of all, these equal highs. So 1, 2 levels in the market, which are completely equal, basically seen as a resistance level. We know there's liquidity around these levels, so pretty much we got a clear trade to buy from here and take it to here. So basically we would have a solid trade idea to buy from this level and target, first of all, this resistance, second of all, this resistance. And there would be absolutely no problem with just setting this trade and letting this trade do its thing. But there's actually more opportunities that we can take advantage of using that fractal theory. So if we know the same formations, the same structure, the same supply and demand concepts work across all time frames, and we are now looking for the market to pull back down into this level here, well, what is stopping us from then taking a look inside of the price action that we've got within this area and seeing if there is a fractal opportunity to sell the market down? Because if we're expecting a fill anyway, we may get the structural shifts on the lower time frames that lead us into a nice opportunity. So now we're viewing the same exact price action, but we're looking at the 30-minute time frame. So we've jumped down 2 increments from the 4-hour to the 1-hour, from the 1-hour to the 30-minute. And now that we're here, we can look for very similar structural shifts and see if a new opportunity arises. Now, of course, with the larger idea we have in mind to buy from demand once it's retested, we don't have a major concern of getting a trade here. But if the market does tell us that there's opportunity to sell down into the area that we are hoping to buy from, well then why would we not take the trade? And this is where that dynamic trading comes in. We do one piece of higher time frame analysis, which preps out where we want to buy and where we want to sell, and then we look for opportunities using that fractal price action within that bigger picture idea to identify those sell to buys, buy to sells, and all of the trades that we might have mixed in there. So looking at this 30-minute time frame then, we can see that we have a structural low just here, which has been pushed through by price action. Now at this point, it's only formed wicks at this point here. So I would not be looking to sell pullbacks from that point. But what we've now seen is the market is starting to sink a little bit more. And we've actually started to see closures through that previous low. Now, if we mark on the next significant low as well, you can see in just a couple of candles time, we actually closed beneath that low. So what exactly are we seeing here then? Well, we're actually seeing a market that is forming higher highs and higher lows, and is now shifting into lower lows and lower highs, which means we will have opportunity to sell this market down. Now that this low has broken, we have confirmation that the 30-minute time frame is turning bearish. So we could take what you might know as a counter trend opportunity to sell this market down. Now, I don't really believe in the term counter trend because I know the market's fractal. So what is the trend? The daily trend might be up, but the weekly trend could be down. The 1 hour time frame might be showing an uptrend within that downtrend, and the 15-minute might be in a downtrend in the hourly uptrend. There is no set trend, so I don't really like the term counter trend. There are going to be hundreds of different trades taking place at any given time in any market. But for simplification, it would be counter to the 4-hour trend. The trend that we're seeing on the 4-hour is bullish, so we're now going to be looking for a bearish trade to fill that range, okay? We've seen a bearish shift in the 30-minute price action here. We know that the market is bullish from this point around here, and we know there's a market gap that is very much likely to be filled. Just a side note, if you didn't know that, gaps in the market are very often filled. We've got this 30-minute structure shifting bearish now, so we'll be looking for a pullback sell opportunity just to fill that gap, and then we can start shifting into that larger 4-hour buy. So what I would do is mark out supply. I'm going to be looking at this area of supply just here. Stop loss would be above the high, sell would be on the zone, so we would be looking for a trade just like that, and then our target would come down to fill the gap. Now you can see that this opportunity has a risk reward profile of just under 2R, which means for every $1 we risk, we're going to be making back $1.96. Now that's actually not enough for me in my trading plan, but because we've scaled down, we can actually identify this deeper imbalance into this area here, right? This is the demand that kicked off this bullish movement, so we can actually extend our targets out safely to this point. And now we have a risk reward profile of 2.63, which means for every $1 risk, we'll be making $2.63 back on this trade. So now it's as simple as letting this trade play out. Now we can leave the 4-hour trade exactly as it is. Or if we're really expecting the market to come down towards this area of demand, we could refine our entry to get better risk reward. But now we have used the fractal theory to, number 1, find a large bullish trade, and then number 2, scale down to identify the same concepts once again, the fractal concepts on a lower time frame, and we've opened the doors to a potential opportunity to sell down towards our larger buy. Now, you'll actually be surprised to know that probably the majority of the trades that I personally take follow this exact format. Okay, I reckon about half of the positions that I take in my own trading aren't even the bigger movements, but they are the smaller movements that I identify on the way into the bigger trades. Pretty much every large swing trade that I identify forms some of these fractal setups, and this is where a lot of my trades are actually taken. Now you can see in this instance, we had that fill of the range, we filled in that selling movement, and we traded straight into the buys, leading the market up into new highs. And you saw there that we turned one solid trade opportunity into two, because we actually just saw opportunity to easily sell down through the range. We were able to do that, and then the market goes and leads into its bigger trade, and instead of just capitalizing on a big trade, we also took advantage of an extra close to 3% just by using the fractal theory. To show you that I actually do trade like this, I shared both of these trades before they happened. Here's the post that I posted on Instagram. If you're not following me on Instagram, there's a link in the description. Follow me there for trade setups and extra lessons. And now if you really want to become a dynamic trader and learn a system that will allow you to trade dynamically successfully, hit the 2 links at the top of the description. One is for a free course on system building, and the other is for my full trading academy. And if you don't want to do any of that, that's fine too. Just check out this video because I know there's some value in there for you. So thank you for watching, and I'll see you in the next one.